everyone, welcome back to my channel. I'm Shakelia LeBlanc, aka the Loan Slayer, your guide to navigating the exciting yet sometimes challenging world of home ownership. In my previous video, I discussed student loans and how to calculate them for FHA loans. And today I'm doing the same thing with VA loans. So grab your pen and your notepad and get ready to say hello to your new home. Now, I love doing VA loans. They're probably my favorite. Not only because I have family members that are retired veterans and active duty, but these loans are designed to take care of our military families, and they're a little more flexible with the guidelines, which you'll probably see today as we read through them and go through the student loan examples. So every time I do a video explaining how things work, how guidelines work in the world of mortgages, I'm always going to read directly from the guidelines. That's what I do in real life, and I think that's the most helpful way. So let's go directly to the VA guidelines. If the borrower provides written evidence that the student loan debt will be deferred at least 12 months beyond the date of closing, a monthly payment does not need to be considered. And that's a big one. So we'll stop there because that's completely different than an FHA loan. If you remember, for an FHA loan, no matter what, we have to use a payment, and it has to be more than $0, right? So if it's deferred for a VA loan for 12 months past the date of closing, we don't have to use the payment at all. If a student loan is in repayment or scheduled to begin within 12 months from the date of VA loan closing, the lender must consider the anticipated monthly obligation in the loan analysis and utilize the payment established by calculating each loan at a rate of 5% of the outstanding balance divided by 12 months. Example, a borrower has $25,000 student loan balance, and you multiply it by 5%, which equals $1,250. The amount, $1,250, is divided by 12 months to equal a monthly payment of $104.17. If the payment reported on the credit report for each student loan is greater than the threshold payment calculation above, the lender must use the payment recorded on the credit report. So what this is saying is that we have to do a calculation of 5% divided by 12. That's the calculation. If that number that we get in this example is 104, right? If that number is less than what is on the credit report, then we have to use what's on the credit report. So if we just calculated a $25,000 payment, and it equals, the payment is $104.17, but what's reported on the credit report is $200, we have to use what's on the credit report. If the payment reported on the credit report is less than the threshold payment calculation above, in order to count the lower payment, the loan file must contain a statement from student loan servicer that reflects the actual loan terms and payment information for each student loan. The statement must be dated within 60 days of VA loan closing and may be an electronic copy from the student loan servicer's website or a printed statement provided by the student loan servicer. It is the lender's discretion as to whether the credit report should be supplemented with this. So that's our answer. If our payment is higher than what's on the credit report and we want to use the lower amount, then we have to actually prove that with documentation, right? You have to have your income-driven repayment plan submitted to the lender, and it's up to the lender to decide if they're going to order a supplement to have the credit report reflected as well. So for a VA loan, it's pretty simple. If it's deferred more than 12 months past closing date, don't have to even use a payment. If it's not in deferment for 12 months, and it's in repayment status, or it's going to start to have a repayment begin within that 12 months, we have to use a calculation. If that calculation that we get is more than what's on the credit report, then we have to have documentation to support that's the actual payment. If our calculation is less than what's on the credit report, we're going to use what's on the credit report. So we've already covered VA loans. We've covered FHA loans, student loan calculations, and next we're going to get to conventional loans, which will be my third part. So if you have any questions, please list them below. I will answer them or make a video. Let me know what other topics you guys are interested in. I would love to discuss them. And if you found this helpful, please like the video, subscribe, share it with a friend, and I'll see you guys next time. Bye.